Hello everyone, welcome to my YouTube channel. My name is Sheila. In Portuguese is Sheila. I am a data scientist, and today we're gonna analyze uh, one of the most extraordinary companies in modern business history, NVIDIA. Over the last decade, NVIDIA transformed itself from a niche gaming hardware company into the one of the most valuable corporation on earth. But how did this happen? And what do the numbers tell us about the company's future? Let's find out. The beginning, NVIDIA was founded in 1993 by J.C. Wang along with Chris Milankowski and Curtis Prian. At the time, the personal computer industry was growing happily, with NVIDIA's focused on a very specific challenge: improving computer graphics. The company specialized in graphic processing units, or GPUs. Unlike traditional CPUs, which are designed to handle a few complex tasks at a time, GPUs can perform thousands of calculations simultaneously. Initially, these chips were mainly used by gamers. For years, NVIDIA was known primarily as a gaming company. Very few people imagined that those same chips would eventually become the foundation of artificial intelligence. The unexpected opportunity during the 2000 research discovered that GPUs were extremely effective at handling the massive calculation required for machine learning. This changed everything. What began as a gaming technology suddenly became critical infrastructure for scientific computing, deep learning, and artificial intelligence. NVIDIA recognizes this opportunity earlier than most companies. Instead of focusing only on hardware, it invested heavily in software through a platform called CUDA. CUDA allowed developers to program NVIDIA GPUs for advanced computation tasks. This created a powerful ecosystem once company and researchers built the system around CUDA. Switching became difficult. This gave NVIDIA a significant competitive advantage. The AI explosion. The real turning point come with the rise of generative artificial intelligence. Models such as ChatGPT, image generation system, and large language model require enormous computational power. Training these systems can involve trillions of calculations. Um, the vast majority of this work is performed by NVIDIA GPUs. Today, NVIDIA supplies the hardware used by many of the world's largest technology companies. Its customers include cloud providers, AI startups, research, institutional, and enterprise organizations around the globe. So now let's begin collecting the data. I'm using Python in Google Colab. Okay. So let's analyze the NVIDIA using a quantitative forecasting model designed to estimate the probability of future price appreciation over the next 12 months, rather than relying on opinions, new headlines, or market sentiment. This analysis is based on historical price behavior, volatility, momentum, risk metrics, and thousands of simulated future scenarios. Let's look at the results. The model estimated a 79.68% probability that NVIDIA stock price will be higher 12 months from now than it is today. In other words, nearly 4 out of every 5 simulated scenarios have resulted in a positive outcome for investors. This suggests that the long-term trends remain favorable and that the market continues to assign a strong probability to further growth. The model also estimated a 66.44% probability that NVIDIA could deliver a return greater than 20% over the next 12 months. This is a remarkable figure because it indicates not only a high probability of gains, but also a remaining probability of substantial gains. On the downside, the probability of experiencing a decline greater than 20% was estimated at only 9.29%. Why, why no, why no investment? Uh, while no investment is risk-free, the balance between upside potential and downside risk currently appears favorable according to the model. The expected return generated by the simulation was 61.26%. This is important to understand. That is not a prediction of what will happen. Instead, it represents the average outcomes across thousands of simulated future paths. Actual results may differ significantly, but these numbers provide a useful estimate of the central tendencies of the model. Next, let's discuss momentum. NVIDIA 12 months momentum currently stand at 35.63%. Momentum is not of the most widely studied factors in quantitative finance. A strong positive momentum reading indicates that the stock has been constantly advancing and that the existing trend remains intact. Historically, assets with strong momentum often continues outperforming for extended periods, although this is never guaranteed. Now let's examine risk. The maximum historical drawdown observed in the data was negative 66.34%. This means that at some point in the history, NVIDIA lost more than two-thirds of its market value before eventually recovering. This is a important reminder that even exceptional companies can experience severe declines. Investors considering NVIDIA should recognize that the company's long-term success has come with periods of substantial volatility. And finally, the model assigned NVIDIA a quantitative score of 8 out of 100. Under our classification framework, a score between 8 and 89% is considered excellent. This places NVIDIA among the strongest companies evaluated by the model. To summarize, probability of being high in 12 months, 79.68%. Probability of gaining more than 20%, 66.44%. Probability of losing more than 20%, 9.29%. Expected return, 61.26%. 12 months momentum, 35.63%. Quantitative score, 8 out of 100 classified excellent. Based on the current data, NVIDIA continues to demonstrate strong momentum, favorable risk-reward characteristics, and a high probability of positive performance over the next year. Of course, markets are uncertain, and no model can predict the future with certainty. However, quantitative analysis allows us to make decisions based on probability rather than emotions. Thank you for watching. If you enjoyed this analysis, subscribe to the channel and join us as we continue to evaluate some of the world's most important companies using data, statistics, and quantitative forecasting. See you in the next analysis.